So the other type of revenue that the non-profit organization receive is the life membership subscription. Members can enjoy facilities of the club and become members for life by paying certain lump sum subscription. Okay, so they may pay once for quite a substantial amount of money, but only once in a lifetime, and they will be able to enjoy the facility that is provided by the non-profit organization. Okay, so the subscription will not be treated as income in the statement of income and expenses solely in the year it is received. Okay, so when the members pay for the life membership subscription, because it's a life membership, therefore we cannot recognize the amount that we receive in the we cannot recognize it totally in the current year that it is received, because the benefit for the member should be given to the member throughout the member's life. Okay, so it's not for one particular year, but it's for the lifetime of the member. Therefore, we should not recognize the total amount in the current year, but we must spread out in this year and then the following years. Okay, a separate life membership subscription account will be prepared for this. The life subscription will be written off annually to the income and expenses statement by installments. Okay, so again, because the member has paid for his lifetime, therefore we must spread out evenly across a certain number of years. Okay, and the credit balance remaining at the end of the year will be shown in the statement of financial position as a liability. Okay, because we receive a huge some amount of money, but only a certain portion is related to the current year. Therefore, the remaining will be treated as a liability and placed under the balance sheet as a liability item. Okay, so life membership subscription will be a liability except for one year that is a portion as revenue. So how do we record the life subscription? At the time of receipt, when we receive the cash from the member, we should debit cash by the amount that we receive from the member, and then we credit the life membership subscription, because again I said a life membership subscription is a liability. Therefore we credit the liability account. It is not a revenue account. Okay, it is a liability account because we cannot recognize the amount paid by the member in the current year because he pays it for his lifetime. But at the end of the current accounting period, we must apportion some of the amount paid by the member as a revenue in the current year. Therefore, the recording for that one will be we debit the life membership subscription in order to take out a portion from the life membership subscription account, and then we send it off to income and expenses for us to recognize it is as a revenue for the current year. An illustration for this. The FPK Bowling Club requires a member to pay 3,000 to obtain life membership. Okay, so for a member to obtain a life membership, he should pay 3,000 ringgit. During the year ended 31st December 2020, this club had received payment of 3,000 ringgit from 5 members. Okay, so 3,000 ringgit from 5 members, so that it totals up to 15,000 ringgit. It is the club's policy to allocate life membership to income and expenditure account over a 15-year period. So the club makes a policy for its accounting such that any life membership payment will be apportioned every year throughout 15 years. Okay, so if in this particular case the club receives 15,000 ringgit from 5 members, therefore apportioning it to the current year, the club will recognize 1,000 ringgit as revenue, as a subscription revenue. How do we do this? Okay, so firstly we receive cash. Okay, we receive cash for 15,000 ringgit. Therefore, we need to credit the life membership subscription, because we would debit cash account, but then we would credit life membership subscription liability account. by 15,000 ringgit. Okay. At the end of the year, we will recognize only 1 year of revenue, whereas the non-profit organization has a policy of 15 years apportioning the life membership subscription. Therefore, 15,000 divided by 15 years, it is 1,000 per year. Therefore, it is 1,000 per year that we will send off to our income and expenses statement. So we debit life membership subscription of 1,000 ringgit. So when we total up the debits and credits, we will obtain 15,000 credit balance. Therefore, the difference here on the debit side, the difference is 14,000. 14,000 will be our ending balance, which we will carry forward into the next year, okay, as a liability account. So the 14,000 will appear in the balance sheet at the end of the year. Besides receiving subscription as well as life membership subscription, non-profit organizations may also receive donations in order for them to run their operations, to conduct activities that benefit the members as well as non-members of the non-profit organization. So donations received are usually shown as an income in the year that they are received. So whenever an organization receives donation, a general donation, then they should immediately recognize it as an income. Okay, so to recognize it as an income, we debit cash, of course, because our cash increases due to the donation, and then we credit donation received, which is a revenue account. However, if the donation is stated for capital purposes, if the donor said that the certain money that they are giving is for the specific purpose for capital reason, maybe the donor gives out 100,000 ringgit for the non-profit organization to build a clubhouse. Okay, so that is for capital purposes. Therefore, it should not, donation received for that amount should not be shown in the as a revenue. Instead, it should be shown as a balance sheet item, and it is a liability because we have received money, but yet we have not given out the benefit. We have not fulfilled our obligation, which is to build the clubhouse. Okay, so in that sense, it will become a liability for us. Okay, however, if a donation is for general purpose, which will be used this year, then we will recognize that as a revenue.